Hello, traders. Let me know if you guys can hear me and see the chart okay. Let me know if you can see my cursor moving around. What's up, Nabil? What's up, Andres? Alistair, what's up? Thank you, Nabil. Give it another 30 seconds or so. Let some people join in. My gringo face. What's up, Chuck? Morning, Ross. How's everyone doing? Who's got crazy plans this weekend? Or are we all just waiting for Monday to trade again? That's how it goes. What's up, Bull Breakers? Good morning. What's up, Rudro? How you doing? Where you guys watching from? Saw Andre said Colombia. Ross is chilling. Resetting. The ghost in the machine, what's up? Yo hablo español, Andres. Carnival. Trinidad. Right, Ross. Work, Bangkok, Louisiana. What's up, Satoshi? Hey, Abos. FVG, what's up? Hi, Jennifer. Kids karate class. Love that. From all over. What's up, Mario? Portugal. What's up, Michael? Bulgarian. Wow. Philly. Cool. All right, so we'll get into it. Gonna kind of just go through some key price action from this week that I want to discuss. A lot of good things happened this week on multiple time frames, as we will see and kind of dissect. First, this is NASDAQ, of course, but we're going to go up to the daily chart. You guys obviously witnessed extreme sell side delivery this week, and we had all this engineered sell side built up. Okay, now if we kind of rewind a bit to start the week, we have to ask ourselves, play devil's advocate in our review, right? And if you recall from the weekly outlook in Discord, this was kind of what we were talking about, where if this is last Friday's or last week's close, okay, at that point, obviously we hadn't purged all the sell side. So coming off 2 down close days, and specifically Friday's extreme heaviness from February 21st, it's perfectly reasonable to expect downside continuation. But objectively still, like coming off of all of this chop, we kind of have to take it step by step and try to use as many tools as we can to gauge the likelihood of downside continuation, which we did get, but we'll kind of review some things here, So Friday's close here, and even just looking on the daily chart from Friday's close, this price level, we'll call it like 21,660, all the way down here, there's no really fair value gaps to gauge off of, inversions, etc. Right? And you guys know, who have been following how I engage with price for a while now, how I engage with price. So I need to go to the lower time frames to see if there's a clear depiction of this. Now, at the same time, before we do that, we have internally a swing low here, another daily swing low here, right? But we have to understand the likelihood of, A, why is this a strong draw? This is a signature that we'll see often, that we have seen often, where a swing lower, swing high, especially if it's on daily 4-hour or session low, session high, which we'll get into more as we progress here. For a high probability liquidity pool, see how Friday's low, using this dealing range right here, it's falling just short of equilibrium. Okay, so this is a hint, first and foremost. Obviously, it's not a huge move, but this is good to add to your trading toolkit, and if you've heard me talk about this before, it's good to reinforce it. And obviously, by extension, the conservative targets, and I'm going to reverse this because I want my green to be discount, will be here and here. Okay, but how can we try to gauge the likelihood of, okay, well, we've been consolidating. We still kind of have relative equal highs above on NASDAQ, and more so, if you recall, on the S&P. How come we're not just going to do this and then reverse back up or just chop around, right? That's a possibility to start the week, but we have to use all our tools and how we engage with price and high probability PD arrays to understand, okay, is this a move to discount, to reverse, or are we finally going down to get the external, all this engineered sell side liquidity? Okay, so we're going to go down and we're going to look at the 4 hour. Okay, so as you can see here, this is our weekly open. Okay, and we start to look at the left side of the curve to understand where we could reject from and what type of delivery that we want to see. So of course, weekly open right here, we have slight manipulation above Sunday opening price, and we just come up a bit into this inversion here, but more so I want to start with some of this price delivery from the left side of the curve here. Okay, and this is why high probability, in this case bearish inversions, are so powerful, especially when we do have all that sell side liquidity that we cleaned up. Okay, all these lows are what was marked on the daily chart. So if you're new here, I'll discuss it real quick, but it's very, very simple on how we can classify, and I'm going to delete this here, on how we can classify or categorize an inversion fair value gap as a high probability inversion, i.e. it should push price lower when we're bearish, right? More so to other just kind of random inversions. We know what kind of delivery we want to see. So the main rule is that we just look at the left side of the curve and just look to see, was the algorithm utilizing this BISI here or this BISI here, right? And best case, it was respecting that on a close, because that shows me that plain and simple, it was a factor previously for the algorithm. And then once we get that close below, it constitutes it as a high probability bearish inversion. It's a form of change in the state of delivery, of course, and we want to see that push us lower, right? So the fact that it was used on the left side of the curve gives me more confidence it'll be used on the right side of the curve. Okay. Now, in tandem with high probability inversions, we want to see strong rejection out of them when we're bearish. And if we have any SIBIs above, we want to see them remain as breakaway gaps, right? And this ideology that we're laying down here foundationally goes for every time frame. Okay. Of course, everything has to be in motion when we're actually in a trade or looking for a specific type of delivery. But this is our 1-2 punch where we have a high probability inversion and a breakaway gap. Okay, so again, this BISI from February 4th used to send us higher, close below, come right up into it here. Now, what's the signature of weakness here? Obviously, we're not even closing within it, but we can't even reach 25% of this, the lower quadrant. If I'm going to put on the quadrants here, right? We can't even reach that, right? Let alone 50% or CE, consequent encroachment, of this bearish inversion here. So signature of weakness, and at the same time, we also have this BISI from 10 a.m. on February 3rd that was used to send us higher on the buy side of the curve. We closed below it here. We're waking up into both of these, respecting it here, trying again here, and then we close below this one right here. Okay, so this is what we're utilizing for a very significant tool to understand what type of delivery, but again, kind of rewinding, continuation. Was this just, let's go here, like when we purge these, is this just a move to sweep up internal sell side liquidity to go higher, especially with recent conditions and such consolidation on the higher time frames, and unwillingness to move around freely to one side of the external range? Okay. We have to objectively ask ourselves our questions, and we can use these tools. So like at this point, what do I mean by this? Like this low here, we're coming down and running. Let me make this bigger. Running that low, right? We're coming down and running this low. So after we sweep when we're bearish and if we're trying to gauge continuation to the external sell side liquidity, especially all that clear as day, relative equal lows, engineered sell side on the daily. We use these tools, and of course the bodies tell the story, right? It's such a simple thing, but it's so important, where understanding the likelihood of if this is a sweep and a reversal, what should we do? We shouldn't close below this BISI, but do we do that? Yes, right? So if we're bearish, we should see bearish signatures out of this. And what should we do? Once we close below this, it increases the likelihood that we're going to do what? Come down to here. You apply that same ideology to what? You just look at the next discount objective, excuse me, and we have all these sell side liquidity pools that we've mentioned. Price higher, it's so easy to see, and it really sets the stage for your narrative and what your bias should be. Okay, and again, the likelihood of continuation. It's not always going to be perfect like this, like everything else in trading, but the bodies tell a story. If this was just a liquidity sweep right here, okay, right here at this candle, if you follow my cursor, we're coming down and we're respecting this on a closing basis at that point, right? So that's an initial sign of potential recovery. But what do? We left another relative equal low right here, right? So we're engineering more sell side liquidity on top of this, what we saw on the daily chart. And again, we reverse to this high probability inversion, fail to reach this one, another signature of weakness, and then look at this right here on Thursday. The high of this candle, 86.50, 88.25. So it's almost going up to tick the top of that. And look at the same time, look what the bodies are doing. They can't even close at or above 25%. Again, if I'm going to steal these quadrants, I can't even close right there. Okay, so building your narrative, understanding higher time frame directional bias, higher time frame order flow. You weigh, like at this point when we're chopping, you just weigh out the probabilities of, okay, we still have the sell side below. Okay, yes, we saw respect from this, but if we get that close below, it sets the stage for what? The next leg lower. Okay, and that's what happens here. Okay, we see this respect, and finally this closes, and at that point, if we're looking here at the 4-hour time frame still, there's really nothing else for us to do besides just go down and grab those lows. Okay, once we close below this BISI, again, if you guys are following along, February 3rd, 2 a.m., 4-hour displacement right there. We close below it, come up into it, a little coloring outside the lines, but look again at the bodies, and we leave the SIBI on the next candle. What do we expect in terms of the relationship between high probability inversions and when they're bearish inversions, SIBI's above them? We want to see these remain open as a breakaway gap. So couple that logic with just two clear swing lows and a bearish clear heavy trend. This is when we can see this clear as day depiction of us going down here. Okay, so to start off today's review, this type of delivery is what you want to see relative to buy side of the curve, sell side of the curve, semantics, whatever you want to call it, change in the state of delivery. But understanding which inversion should be high probability obviously gives us a good idea of where we could reject. But if we have all this sell side liquidity, what type of delivery we want to see as well. Okay, so again, kind of just to back up here before we progress in the review, like if we were to, let me get this on the chart here so I know real quick what swing low this is. Right, so if this is that daily dealing range that I just had there, if this was just a retracement into discount to sweep this and then go higher, now I'm going to delete this because all this was in a discount. We shouldn't close below, but if we did, we should reclaim it real quick to confirm that bullish order flow is returning and then come back up to the SIBI, but that doesn't happen. And that same logic would be applied here, right? This is why it's important to look at the candles closures. Like here at one point we were trading above, right? We should have reclaimed that if this was a liquidity sweep to go higher and done this and then reclaim this one and climb the steps back up, right? But we didn't, none of that, okay? So good delivery on the 4-hour. I don't think there's anything I want to, actually there is now. So to start the week, we'll begin here. And this is good for bias. Okay, for daily bias, you know, a lot of traders and people think it's some big bad wolf in the woods, some scary thing, but you're just looking at just higher time frame trend and then just signatures like this, like we're going to discuss, what I kind of have been referring to as bias footprints. This is what we want to look for. Okay, so this is Monday's trading, and as we see here, we have the new day opening gap, or new week opening gap, excuse me. So this was Friday's close to Sunday's open at 6 p.m. Eastern time, gap up. Okay, and we see some delivery here, yada, yada, yada. And the most important thing right here, building a narrative, is A, you're understanding this is occurring, it's bearish sell side delivery. And this low right here, okay, that is, as you see here, the London low. Okay, and with the indicator, I saw you guys had some questions. If you just hover over this, it'll just give you the levels, which is really nice. Okay, so, you know, same thing with the new week opening gap. You can put the quadrants on it as well as the middle line. You know, we know when that's applicable, and we'll actually look at some examples today. With 25%, you just hover over, get the level. 50, hover over. 75, get the level, etc. Right, for now, I'm going to keep these off. But building a narrative, we know in and of itself, session lows and session highs are a strong draw on liquidity. That's what we want to be targeting. Okay, then you couple that with a new week opening gap, which we know, again, to reiterate, in and of itself is a strong draw on liquidity, especially when we're above it and we're so heavy. This is a high probability liquidity pool. So London low here, 21,766, right? 21,70, right? So this is falling literally just short of this. Okay, so if I go here, apologies, this is 701. So it's literally 1 point above it. So when we see this session low that's just above a new week opening gap like that, it's such a strong depiction of what our buy should be and where the most likely drawn liquidity is. And then coupled to this, right? If I remember correctly, let's go down here. We have this portion right here. I'll take these off. We have this as well, right? So this is a signature we see often and we speak about often in the group where, again, that same logic, you're just weighing confluence, looking for multiple signatures, where if we have this new week opening gap and upon Sunday open, we just expand away from it and we leave this portion here, that's a liquidity void, which we know is such a strong draw on liquidity. Again, when we're above it and we've been so heavy coming off last Friday, there's multiple reasons for us to get down here. So this Monday was a great example of seeing a signature like this, right? Such a strong bias footprint, as I'll continue to talk about. Spent some time above midnight open, wick above 9:30 open once more, and then we do expand lower. Okay, now if I progress here, once we're below it, right? Let's fast forward here. So again, like oftentimes it can seem it's easy to get overwhelmed with all these things and some of these more advanced concepts, which if you are overwhelmed or you're just starting, it's normal. Over time, it'll become second nature to you when you're reading price and looking at the markets or coming to reviews or doing your own due diligence. It's just a matter of time for these things to start making sense to you. But after we get below it, recall at this point, I won't go back, but we still had all the daily sell side liquidity below. Okay, so when we see a retracement, we ask ourselves, A, do we still have reasons for us to go lower? We have the daily sell side, we have this low here, and this relative equal low here. So they're engineering more sell side liquidity. And then we're also asking ourselves, okay, where is the dealing range, right? Where is premium? If we are going up, it's likely that we're just going up to a premium of the range. Okay, so we see that is occurring right here. I'm going to drag this here. And what are we referring to? What is the algorithm being told to do? Reach premium, right? Allow smart money to get in their positions and deliver, refer to this new week opening gap low. Okay, so he typically trade in the 1 minute, as you guys know, but whenever we see certain things like this, and this high right here fell just short of it, we'll go on the 1 minute chart and look at this, but whenever we see signatures like this where we see a liquidity sweep into a new week opening gap, it's nice when we have like a 5 minute BISI right here that was made on the final manipulation leg to enter off of. It's just so easy and clear to see. In this case, we had these two consecutive ones down here, which is still accomplishing it, right? Close below and expand lower. Okay, it's still good, but of course, if we're trying to short, the higher the better, just in terms of risk reward, key entries, etc. Right? If we go down now, let me just recall. Is there anything else I want to mention here? This is a reclaimed SIBI. I won't speak on this now, but we've been talking about this a lot. I guess I will talk on this now. I'll talk on this now. We will see now. I remember we will see it was that kind of false bearish inversion early on in the AM session. Okay. So this here, we're just, again, similar to what we were discussing with the 4-hour high probability bearish inversions there. We're just looking at what the algorithm referred to and what its initial state of delivery was. So we have this SIBI here, right? That was utilized to do what? To send us lower first. Then we reclaim it at premium objective. And then if this is a turning point up here, once we close below, that's when it's just plain and simple categorized as a reclaimed SIBI. So, to completely simple before, okay, clearly. And then it's a confirmation that a bullish PD array is failing. So bearish order flow is in fact being shown to you, sell side delivery, right? Well, you're saying, well, why is it a bullish PD array failing? Well, once we close above, it should be what? A bullish inversion. So it becomes a bullish PD array, right? And really, yeah, this right here. So this has a volume imbalance right here. So this is why it's important to check, because without, this makes it even better. Without the volume imbalance, it looks like the close above making it inversion. What we do. So we're seeing that also utilized as a bullish PD array to complete the premium objective. So again, at this point, when we deliver to new week opening gap, if we were bullish, we should just continue higher. There should be no other reason for us to come down here, okay? But we just come right back down, close below it, reject, 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 go lower, right? And then you couple that, and this is why reclaimed SIBIs reclaimed fair value gaps in general are so useful for just understanding order flow. Couple that with like an inversion in close proximity / a portion of it overlapping, you get a really good idea of what's going on and the likelihood of certain things occurring, right? Right at the bottom of that reclaimed SIBI. So these concepts are fractal and applicable to the 5 minute here. And as I mentioned, I know we have 5 minute traders, but you're just looking at yourself and saying, okay, if we are bullish, what shouldn't we close below? Well, we had this SIBI that was used as an inversion and to send us lower. So I can see that the algorithm was referring to that. Close below, likelihood that we're going to go lower now. Okay. And again, signature of weakness. We couldn't even reach up to an 8th level of this new week opening gap. So let me just recall, I can't remember if there's anything I want to talk about on the 1 minute here. The main thing is that when we have engineered similar, it's just the same logic flipped. So recall over here, the London low that we already discussed, falling a point short of the new week opening gap, high. It's the same logic right here, just a different scenario, different fractal of price, right? So look how this high is falling just short of the new week opening gap low. Okay, so at that point, if I back this up, at that point, whenever I see these signatures, this is technical probability combined with, not chasing and having FOMO, right? And being okay with missing moves. Like, it's hard for me to short inversions like this when I see that we have I know how to identify engineered buy side liquidity in this case. When I see signatures like this right above what should be the short entry, it's harder for me to short this, right? So this becomes a lower probability setup, right? And lower probability, does that mean impossible? No, of course. We see if you short this inversion, you get a nice move down here, right? So it's just your comfort as a trader. But me personally, like, it's when I see these highs, I'd rather, if I am going to short, wait for that to be purged and then to see if I see this reaction, right? Because I know the likelihood of a swing high, okay, falling just short of a new week opening gap low in this case, is engineered buy side liquidity. Okay, and that increases the likelihood of us delivering back there. So I know my bias, it's better to be bullish until that is purged. Okay, and then we start to see us bleed lower. Spend some time. There we go. Okay, and that's kind of a good depiction of the macro as well, with the indicator. This will be out probably tomorrow, if not tonight, but the plan is to have it for the new trading week. I know I talked about it a couple times in the group this week, but the macro, I'll just talk about it real quick and then we'll get back to price. I mean, it is relative to price. This is how I engage with the market. So this is 149. As soon as a macro comes in, it'll do that for you by default, right? You can, little things like change the, for macros at the top here, change the text size, right, for both the line and the macro box label. Now, I know traders, I like to do it like this with the box labeled out like this, 150 macro. It just looks nice. It looks clean in my opinion, but I know other traders like to have the background, okay? And then you can take the text off, fiddle with the color if you want to make it a lighter hue, right? So it's completely easy to use and applicable to how you like to trade. To be honest, you guys know I like them yellow typically, so let's put that back on there. But it'll save us time where you guys know on stream, not only macro open, but getting ready for a session. It's just honestly a pain in the ass, marking out, dragging out, spending a lot of time scrubbing back, finding like midnight fair value gaps, 9:30 fair value gaps if we're in the PM looking for the morning. Little things like that. We want to make our trading as streamlined as possible, not only with the macro power 3 checklist, but all of these things in terms of our performance, right? I just want to focus on, I like these tools, new week opening gap, session high, session lows, macro opening price, key PD arrays, but I want to put all my focus just on using these tools and what price is telling me relative to these, so I don't have to spend time or get distracted or waste time on stream with you guys, more importantly, okay? But here, it'll just mark yourself out for you, and then it'll just progress. Like, obviously, if it pushes lower, see, it'll just go lower there, so it won't overlap, okay? And then as a session concludes, it'll just mark out like lunch low. So if we go back to 129, you see the session lows, lunch low and lunch high isn't there yet. And then right at 130, it'll mark it out for you. Oh, I was one candle behind. It'll mark it out for you right there. Okay, now kind of a note on that as well. Like with the session liquidity pools and session times, I know that some people tweak some of the times. More specifically, I mentioned this in stream yesterday, the lunch time window. I've heard ICT say the lunch is 12 to 1:30, 12 to 1, 11:30 to 1, all these different times. I personally just stick to 12 to 1:30, but if you use different times, you can change them easily here. Okay, so let's say you just did 12 to 1, it'll do what I just showed you right at 1 p.m., right? Or any of the other sessions, okay? But it's really nice where it'll just plot it for you. But again, back to price, and this is another thing just to wrap this up. So if you want to leave it on, you leave that box unchecked. You can see previous macros as well as this one we're operating within. Okay, look how we have a sweep above macro opening price there. It's really nice and really random, I'll say. But if you don't, which I typically take it off, it'll just go away after the macro concludes. See how with that 150 macro power 3 sent us to what? Lunch low, a session low, and coming back here, right? Let's actually, so this is good with price as well. And this was what we were just talking about with reclaimed SIBIs. Let's kind of back up to right here, where if we have this SIBI, we went below macro opening price, we swept the low, we close above this, right? This should be bullish order flow, right? If it's going to occur now, we're going to return back here. We should not close below this, right? But we're also seeing, we know the rejection off the new week opening gap, everything we kind of talked about and how we read price, all to say, if we are bullish, we should not close below this. So going back to what we were just discussing, this becomes what? A reclaimed SIBI after a sweep above macro open. Okay, what are we going to reach for? A low here, a low here, a low here. And do we have ultimately, which we won't get every time, we know this, but ultimately when we get that delivery to the closest session low, those are the best moves. Okay, so reclaimed SIBIs are a very, very powerful tool, and it can also like increase the likelihood of another SIBI. This is going to probably confuse a lot of people. If the reclaimed SIBI gets reclaimed with another bearish fair value gap passing through it, it increases the likelihood of this being a breakaway gap. Okay. But if it does retrace into it, I don't want to see it get filled completely. It just becomes a higher probability SIBI. So it's important to look to the left side of the curve and see what you have here. So again, if you're getting confused now and you know how to constitute high probability bearish inversions, let's imagine that's what it was. You're just looking at the left side of the curve and trying to stack confluence with the most recent PD array right here. Okay. So again, main takeaway is, in my opinion, because liquidity is a priority, ultimately bias as well. When you see this, it's hard for me to short, and I'm okay with missing these moves. It's still nice to show me like a high probability bearish inversion down to here, but I know that the likelihood of that occurring is lower than I'd like. Okay, so let's let me progress real quick. I believe I want to talk about now. This is Fridays. I want to go to Wednesday real quick. Actually, no, we'll progress right to Friday because Friday was cleaner. Wednesday was similar to Friday's logic in the morning, but Friday had the cleaner move and cleaner delivery. So we'll just focus on this. So this portion of the review will be at least my favorite to talk about because it is just so clean when we can mix all of the concepts together to get a good understanding of order flow, of what needs to occur before we expect a reversal or a specific type of delivery, time and price. Friday was really, really nice in this regard. Okay, so again, if I'm coming onto the charts, and I'm a New York AM session trader, and I see equal highs above, relative equal lows below, right? Right here. So this is backed up. This is 9:30 open. So let's even do this. Where we have that. We have liquidity on both sides. And you guys know whenever I see that, whether it's for daily bias like this or I'm trying to scalp on the 1 minute or find a 1 minute play, I need to wait for one side to be swept, because if I'm trying to operate within this and trying to play the guessing game at a random 1 minute fair value gap long or random 1 minute fair value gap short, whatever the PD array we're trying to use, if I'm putting my stop loss at one of these internal highs or internal lows, while we're in consolidation, I'm more likely to get stopped out there, take easily avoidable losses, right? And I'm allowing the market to do this as to consolidate within relative equal highs above, relative equal lows below, as long as it wants. I don't need to be a sniper and try to guess exactly which side it's going to run and when, right? Of course, we can get a likelihood of which one we want to see swept first, and we're going to talk about this here. But the best setups will occur when we have this range when one side is swept. Okay, now adding other tools and confluences on top of this. If we do sweep the lows first, right, what would that also be accomplishing? We'd be going below midnight opening price. We'd be going below 9:30 opening price. Okay, that's what we want to see for the best buys. All right, we want to see that occur. Okay, and for a long setup, regardless of which side it runs first, but since obviously it went down lower, as we'll discuss as we saw yesterday, we want to see clear manipulation. So what is manipulation? Running sell side session liquidity below key opening prices. And then we just look for our reversal signatures and rely on our ability to read order flow. Okay, now just kind of a quick signature as well. When you see this is a good like barometer to start the day. Like I think I mentioned this in stream yesterday on the 15-minute, this BISI and this SIBI, this BPR coupled with the new day opening gap. This is when I'm saying to myself, okay, as long as we're below this, it's probably going to run the lows first. I'm not going to take a trade on this, but just getting in sync with order flow, right? After the manipulation, right? Once we reclaim it, if I'm seeing all the signatures that I want to see that we saw yesterday and that I'm going to discuss here, on top of us reclaiming that, it's just everything's in motion, right? This is how I use these tools, okay? So if we progress here, I guess I'll just go now down to the 1 minute, okay? And looking at all of these highs, we see the session highs up here. We see, as I often say, if we want to see a long scenario play out, as much engineer buy side left behind as possible for us to target. That's what we see here, right? Adding little signatures on it, okay? What did we already discuss on that new week opening gap previous example? Liquidity short of a key inefficiency, so new day opening gap. New week opening gap previously. Also, that's right above midnight open. Also, what's important, if we put on the midnight fair value gap. So this is the first fair value gap after midnight open. Where is that residing? Where are these highs residing? Right below, even in closer proximity, the midnight fair value gap. Okay, so I mentioned this yesterday as well. With the midnight fair value gap, and as we'll see, the 9:30 fair value gap, instead of me having to scrub, obviously this is it, scrub back to anchor it, but also to see if it was a BISI or a SIBI just for additional context, this little up arrow, up triangle thing, that is indicating that it's a, it was a BISI created first. Okay, so again, you're seeing your first priority, draw on liquidity, a narrative being built for all the buy side, and in best case, what do we want to see? Them leave that and run the lows for the manipulation phase. So as we see here, we have 9:30 open, okay, and what do we want to see it do? Run lows. London low there, Asia low in the next candle. So what's occurring right now? We're leaving behind all the buy side, and this is where we can combine the way we engage with price to have even more confidence understanding trap traders with traditionally taught retail concepts, right? Traders are going to see, if we zoom back out real quick, this has strong resistance. We're bearish, strong resistance. This is breakout below support. We're going to go lower, large down close day, right? Where we could do that. That could have occurred. They could just have left the buy side. But if we see bullish reversal signatures, we have the narrative built that we're going to go attack the buy side, because trading is just a game of probabilities, and adding everything we've been talking about here together gives us a very good idea of what's occurring, right? So Here you can see it forms the 930 fair value gap right there. And like I mentioned, like the midnight fair value gap was a BISI, so first it went up. The 930 fair value gap was a SIBI, so it has a down arrow right there. And you can add the midline right, where are you? Okay, right here. It's on by default. If you didn't want to have it, you just drag the opacity to 0, right? So if I'm going to leave it on the 930 fair value gap, but more so typically with the midnight fair value gap, it'll be small. So I won't utilize it as much. Sometimes, yes, but with the midnight fair value gap, I have it all the way to 0, where if I turn it up, I can put the midpoint on, okay? So again, if we see this 930 fair value gap made and it is running these lows for the manipulation leg, Judas swing, whatever you want to call it, on top of everything we've already discussed, what do we need to see occur? We need to see obviously recovery, but we need to see price get back above on a close the 930 fair value gap. So what did we mention on stream yesterday as well? We have a BISI below here, below the 930 fair value gap. So someone tell me in chat, how can we categorize this BISI formed here with this orange box at 935? And I don't trade Forex for Forex, yes. How can we classify this BISI here? Right, thanks, Chuck. A breakaway gap, right? It's the same, another form of what I've called on this channel before and in all the streams, smoke screen, right? So the high probability inversion is a smoke screen for the breakaway gap, right? When we get the close below, the algorithm is, the analogy is that it can't see this. It doesn't care about this. So it's just going to refer to this and go lower, right? That's the same ideology with the 930 fair value gap and this BISI below, right? So we go up, we expand, 930 open, fast forward, okay? And then we come down into this BISI. It takes off, right? So this is permissible. A breakaway gap is still a breakaway gap as long as it's not getting filled completely. So this is the type of delivery we want to see. Also note the body's respecting 50% of this 930 fair value gap. So this is why this level is important, just for additional context. Okay, then we start to run higher. Okay, so at this point, these are trap traders down here. Right, so we don't want to see, as long as we still have all this buy side above, there's a good argument for us not returning here. On top of this, if we've already delivered to this, you want to see the same delivery here, because you don't want to see it come back and fill in this breakaway gap. You want to see this swing low hold strong, that bullish algorithmic signature hold, right? As long as we have the buy side above. Okay. Now, yes, we're cleaning up some highs here, but we still have these highs short of the session highs, and again, ultimately the session highs, Asia and London. And we start to retrace. Okay, so we enter the macro window, and again, as a tidbit, when sometimes we'll have this 930 open overlapping with macro open, I'll just do this. I'll just toggle it off. It takes 1 second, so I can just focus on the macro. Okay, but for macro power of 3, what do we want to see for a long scenario? We want to see it run a low, seek discount, okay, below macro opening, and best case like this, we want to see it refer to the 930 fair value gap. So simply put, again, this high right here to this low. So I'm using this high right here, or excuse me, this low right here. This is the opening range low to the opening range high right here. Okay. Also, good how we're falling just short of the upper quadrant of the new day opening gap. It's probably random. Okay. But we're coming down to a discount, referring to a key inefficiency. And then the last thing for final confirmation for macro power 3, there's a volume imbalance right here in the SIBI, so we have to include that. We need a close, like we were talking about yesterday morning, above this to run the highs. Okay. Also, again, up there. By extension, it's still showing an unwillingness to go down and prioritize filling out this. It's closing above this, prioritizing premium objectives over discount. Okay. So this is enough right here. This can be your bread and butter. This is enough. Okay. Ultimately, we still have the session highs, which is nice to see it draw to. And we did get this, as you guys probably recall, and that we will discuss. But this is what we want to see, right? And it doesn't look, because we're kind of scrunched in here, it doesn't look like a huge move, but if you're taking this inversion to the new day opening gap low, this is 40 or even this high, 40 to 50 points, wherever you're targeting, you take that every day, all day, right? Now, on top of this, if you wanted to hold it a little longer and try to get that session high, which I know a lot of you guys did in Discord, right here, we do retrace, but what do we focus on? The wicks? No, the bodies. So look at this again. So this logic that was applied first to this low not being delivered to, and to this low, this one already delivered to 930 fair value gap. We retrace lower, but the bodies are respecting that. Okay, so at this point, what do we want to see occur? If we're going to get up to the session high, and I'm going to clean this up, what's a roadblock for us? The new day opening gap. We need to see price close above that, and you can make this text larger too, which I'm going to do right now. So you guys can see everything. Okay, so we need to see price close above that. So we're going, fast forward, and then we get that close above. So now we don't want to see it close back below here, as well as the midnight fair value gap right below, which we mentioned. Again, look at this close above the midnight fair value gap. Use that wick below, immediate rebalance, but the bodies respect that. And where does that send us? To close above the next roadblock, the new day opening gap. Okay, come down into it. Midnight fair value gap again. Session high. Okay. So everything we talked about here is algorithmic. And if this is your first stream, or you're just starting, or you're not finding your footing yet, just give it time, right? It's going to seem very confusing now, but to those of you who have been following me and just have been more of a seasoned trader, you know how these things just come together, and you don't need everything, right? You're going to find what your personality is as a trader, where you don't want to use the midnight fair value gap or the 930, but you'll love the new day opening gap, things like that, and you allow your personality, etc. Okay. Don't know why this is freezing here. Now, on top of this, what I want to discuss as well. So if we pull this back up, the new day opening gap, what you see here, is what the default will be. It's just going to show that current day's new day opening gap, and then at 6 p.m. or excuse me, at 5 p.m. Eastern time, the daily close, this will just disappear. Okay, but if you want previous new day opening gaps, and this is why this is honestly for new day opening gaps and new week opening gaps specifically, this is so powerful and so easy to use functionally. We can have a whole template where we just pull up this indicator and pull up previous new day opening gaps and previous new week opening gaps. And we don't have to go back and draw all the things out. And it's all in this thing here. So new day opening gap, you should go show last 3. We'll scrub back and you'll be able to see that. But now it's showing you the dates as well. Okay, so I'm going to just do this to make it easy. All these new day opening gaps up here, and when we scrub out, we gotta make the text smaller, opposed to the 1 minute time frame. Okay, and then you can obviously do things like just take off the quarters in the midline. You don't really need those. Okay, and it'll just show now is the new week opening gap. Okay, it'll just show the new day opening gap and its dates. Okay, and now leading to what we'll talk about here. If I'm going to go to this time frame here. How's everyone doing? Good? You guys learning? Am I making sense, or am I speaking a different language? Okay, so if I put this back on the chart here, and what I want to put your focus on now, I'm going to put some previous new week opening gaps on the chart here. Not that many. Actually, no, I do want this one because this is what I'm trying to say, trying to depict. Unless it might have been S&P. Let's see. Yeah, this is what I'm thinking of. I'm thinking of S&P. My apologies. So real quick review on ES as well. We discussed this at the start of the week, specifically this order block. And this is the same logic for a high probability order fair value gap. Where is this order block nested within? The new week opening gap. So this 4-hour up close candle, 10 a.m. Monday, that's a high probability order block. You couple that with the, if I'm going to copy this, 4-hour down to the 1 hour, we see that that's the 4-hour order block, but we can stack confluence and we can look for signatures here. So this is 1 up close candle, 2 up close candles consecutively. High probability order block still nested within the new week opening gap. Look at a respect mean threshold right there. So something I wanted to discuss on ES that was real good. Now I don't think there's anything else I want to discuss on S&P. No. So now going forward, I could have sworn on, maybe I was thinking of new day opening gaps. I'll still talk about it on S&P. Now it was ES. Okay. So the new week opening gaps, you guys know, we've talked about it multiple times here. If this is a turning point for this upcoming week, this is a great target on S&P. And by extension, using this logic with NASDAQ, these highs as well. Oh, I'm an idiot. That's why. Because I was still in replay. Sorry, guys. One sec. Okay, this is what I was looking at. Okay, so now let me get only the ones I need. Let's see. Yeah, okay. This is what I was looking at in NASDAQ. ES as well, but that's why I was confused because I was still in replay mode. Okay, but if we have this high here, which is Thursday's high, Wednesday's high right here. Is that, yeah, so 2 daily highs, engineered buy-side liquidity. Obviously, that can be good to build a narrative for recovery. But then also, what is that just falling short of? Another high here, and this new week opening gap, previous new week opening gap. So if you just have a template open with these new week opening gaps to really only put your focus on, okay, is their liquidity falling just short of it like it is here? That's when it can be really useful to add to the narrative for this being a draw. Okay, so I'll announce this in Discord or Twitter, here on YouTube, wherever, whenever it's ready, the indicator. But even just the technicals, what we described today, a lot of great takeaways with this as well. Just to wrap it up, if you're pulling this up, historical at the top here, and there's a little tooltip. So if you forget, right, it tells you here, it tells you what this is. Just hover over it, remove visuals from completed intraday macros. There's tooltips here. We try to make it as user-friendly as possible. And then little things like if you want to have your CEB solid line, you can do that, or change the colors completely, right? If you want to make the macros purple, you can do whatever. And then fiddle with the text, everything, etc. right? But as well, like if you see this here, historical, right? If you have this toggled on and go up to previous days, it'll show previous days PD array session highs, session lows. So if you go back and journal, it'll already be charted for you. So it's not a pain in the ass to go into replay and look at previous previous liquidity. You don't have to go mark it out, spend half your time in your journaling process, let alone trading itself, marking up charts and spending half the time doing that. And it's just tedious, it's frustrating, it's annoying. And even getting into the mood to kind of journal and go back, it's like, oh, I got to draw all these things, save these charts, mark it out. Where if we have all these things charted, we can just go back and then just look and scrub back from this previous week. Right? So it's so useful. I can just come right back into this. And then, of course, we add any annotations we want to add, things of that nature. If I put this back on too, okay, all the macros are right here for us. And I know some of you guys are probably in the group hyped about this because you want to see me just drawing all these things all the time. And I'm excited about that too. But we can just go back to previous days and like imagine throughout the week, so you don't forget, you make a list on macros to review on Saturday, if that's your weekly process. You just write down Monday, the date, and the 1050 macro, whatever. And then it's so easy to go back into that day already charted. And then you can dissect it, get right into it. Right. And then you say, oh, Tuesday, 1:50 p.m. macro. I want to look at that this week. Okay. Kind of look at some macros. What was the there was a really nice, I think it was Monday, 550 macro. Yeah, see? The memory of a trader. And then we'll wrap it up here because this is just another iteration and reinforcement of macro power 3 for anyone struggling, just to continue to hammer it home. Where if we have a session lower here, so see how this is Tuesday, I apologize, Tuesday the 25th, pre-market trading. Tuesday we formed London low late in the session, right? So look at this, it's 4:59 p.m. Okay, so if we have a high here, and in scenarios like this, we start to see them build that trend line liquidity. This is the clearest depiction on what your macro bias should be if we see the turning points. So we have this little BISI here, this little volume imbalance here, tiny SIBI to the left of it. So we know that is a macro BPR. And the checklist, and I've thought about adding this in an update. Let me know if you guys think it's a good idea or not, but at least adding the option, you guys know, and you probably won't need it over time, but if you're just starting out or you want to keep your focus, a little checkbox over here with like an entry checklist, you know, macro window, liquidity sweep above, below, macro open, inversion, confirmation, /entry, whatever. All right, you can put it there, a little box at the bottom. I feel like that could be useful as a tool. Obviously, not everyone needs it, not everyone will use it, but it's something good to utilize. And there's other updates as well for version 2. But here, macro BPR, and then again, this SIBI was utilized to send us lower right here for macro manipulation. So once we close above it, what does that make it become? A high probability bullish inversion. You're looking at the left side of the curve and going below for macro manipulation. Close above right there. Becomes a high probability bullish inversion. We expand to the high. Okay. Use there, SIBI, close above, brings us home. And obviously we expand it even further up, but these are all you need, right? I think I talked about this in a review this week, but since we're here live on YouTube, it's good to review this because this is really nice, where this is obviously the best case entry. And then on this close, you just go to even and you just let it play out. And as we get closer, like you don't want to be, what's the saying? You don't want to be a dick for a tick, right? If we're really close to this, then I would, once I'm in good profit, technically we shouldn't close below this. And I don't want it to be one of those scenarios where we get close and NASDAQ's just a brat and comes back and saves it for the New York session. If I do get this move, then I'll start doing things like trailing it. So like if we close above this one here, the lower inversion, then I would trail to, the high of this, or if you want to let it breathe, the low, right? We shouldn't even come back down below this. Now, if you want to wait for more confirmation, you can let the reversal be shown to you and then enter on the next high probability PD array, which is right here. Okay. Once we close above this, if that's your entry, the more conservative entry, you just move to even and let it run. All right. But these are the setups that I want you guys to focus on. Key takeaways as well, because this is so important. This is something that I struggled with. When the reversal makes sense, macro power 3 is so useful. But if we're seeing, like, I can't recall now if it was, now I'm remembering something I wanted to cover before we get off. I can't remember if it was last week. I think it was, where there was like the macro power 3 checklist was there, but I know it was the macro power 3 reversal checklist played out. It was a short on a very bullish day, and it worked because we swept 2 session highs. I can't recall which day. Maybe we'll look at that, but it needs to have some context around it where, okay, we just clearly swept a daily low, session high, session lows, so this reversal makes sense. And then you target things like internal, sell side, dealing range, equilibrium, things like that. Okay. Now, also what I wanted to discuss, I want to go back to Friday. Where were you? And this is not what I'm getting at, but look at this. This is why these things are important. Okay, so what I'm going to do here is actually I'll leave that on. New day opening gap, engineers buy side, below macro open, 930 fair value gap. Look at this BPR to the left of it, adding confluence. BPR right here, a little coloring outside the lines, but the stop would be there. Expansion, and then we close above the new day opening gap. You guys know how we use this, and expand higher. Okay, but what I did want to talk about, where are you? Was this right here. Okay, this is important. I'm sure some people probably took this, and we mentioned this on stream where we had this BISI, right, that formed, and why this is a low probability short setup with bearish inversions. So we're above, opening range high. We're seeing bullish order flow. So we're just bullish, right? We're seeing bullish order flow, and we're so close to this new day opening gap sandwiched right here. And if we have like a potential entry coupled with a place that we could just bounce, especially if I'm trading against the intraday order flow, this is not a high probability reversal setup, because we could just bounce here, and we did just bounce here. So if you recall from the stream, what do we want to see this become? Someone tell me. Instead of an inversion to go lower, what did we want to see it become? Someone tell me in chat. I'll give it a second. See who was paying attention yesterday. Right, reclaimed. Right, we want to see this just be move lower because A, we're seeing the new day opening gap. The bodies respect the new day opening gap, and this gray box is the midnight. And B, we've just been bullish. So we want to see that bullish order flow be confirmed. And there we have it. And with reclaimed inefficiencies, you guys know this is not only a depiction of what order flow is telling us, but what type of delivery we want to see. Typically with these reclaimed fair value gaps, we get speedy delivery to the next target after that. And that's what we see here. Okay, so I hope you guys enjoyed this review. Okay, I'll give updates on the indicator and stuff, but we discussed a lot of things here. As always, go back into your own charts and do your own due diligence. That's how you even, make your trading journey, trading progress quicker. Not that the goal is to rush through things, but that's how you're going to get the most out of your journaling, your trading, etc. Okay, so a lot of good opportunities will be had this week. And I think I always say this, and I'll just wrap it up here because I'm on YouTube, but most traders, I think, are closer to profitability than they realize, right? You've watched thousands of ICT videos, hundreds of ICT, whatever, so many hours in front of the charts yourself, my videos, whatever. Like, these are good to stay sharp, but it comes to a point where once you have like your model, and my model is the macro power 3, what's stopping you from being profitable, consistent, confident is the in-between. So in between the moments where it's not super clear, if you're still trying to impose your will because you're impatient, you just want to make money, you just want to push the button, it's going to be very hard for you to become profitable, right? You might get lucky here or there, catch great trades, but ultimately those bad habits are going to slow you down so much and frustrate the hell out of you. I know they frustrate the hell out of me. And even now and then I'll make those mistakes, and it's the most frustrating things. More so than just taking a loss, it's the most frustrating thing when you know you shouldn't have been in a trade and you broke your rules, and then it's also a loss. So you're not only getting quote unquote punished monetarily, but mentally, because you know that you know better. Right? So we've talked about it on Twitter Spaces here and live streams or in videos in Discord. And you guys know, like, if you trade less but wait for clear depictions of, do we have a clear draw on liquidity? Do I have the trend on my side? Is the macro power 3 checklist being met? You're going to trade less, but you're going to have better trades. By extension, you're going to be more patient. At first, if you've been impatient, it's going to be difficult. But this is how you grow and reach that next level in your trading journey. Right? Even now, like, I can sit here and show you all the things I want you to focus on. Right? But it's how do you respond after a loss? Whether you were chasing price and you know you shouldn't have been in it, or the checklist played out and it was just one of those losses. No one has a 100% win rate. Right? Do you go on tilt and dig yourself into a bigger hole and make it even more difficult for you getting in your own way? Or do you understand that you're not a bad trader, you don't suck, the model's not broken, the algorithm's not changing, right? It's just one bad trade. You review it, see if there's anything you could have done better, any reason you shouldn't have taken the trade. But oftentimes when I take a loss, I'll look at it and be like, okay, this was just one of those ones, right? It was just a loss. I would have taken the trade again. There are times when I do make mistakes, or I miss, like, ES having, if I'm trying to long a NASDAQ macro power 3, ES has equal lows, and I'm like, oh, I know better, I just missed it, right? Little things like that. Okay, but if I'm chasing and taking random trades, just focusing on the outcome of a trade instead of the process, my model that I've seen play out time and time again, and you guys have seen as well, if I'm chasing, it's going to be hard for me to be profitable. Right? Now add into that over leveraging, it's a recipe for disaster. Okay, so I spoke with, I don't know if he's here, Joseph, yesterday. I spoke with him. It's on the YouTube channel. It's my last video. It was an interview. He just got a 10K payout. It was his first payout. And he has a lot of great things to share. And we kind of spoke about certain things on this topic and his major advice, because obviously having a 10K payouts in general, it's difficult to do, and it's good for his advice. But if you're in Discord, you guys probably recall, and he'll talk about it in this that interview as well, he's gotten out of drawdown 2 times now, right? And that's the most impressive thing as a trader, because you know what you're doing technically, you're trusting yourself, but even mentally, that's where most traders collapse. You know, you pass the funded challenge, you get the funded account, and then your first trade is a loss. And now that's your opportunity to show yourself what kind of trader, what kind of person are you, right? And he talks about his tips, how he gets out of drawdown and ultimately has success, right? He talks about his A+ setups, his journaling process, his journey throughout his trading. You know, when he started about 5 years ago, and now he says, I mean, I'll spoil it a little bit, but he'll go more in depth that, like, a college degree, it takes you 4 years to get one, or sometimes, depending on your profession, 6 years, 7, 8 years, right? He started trading in, I believe he said 2020. And now he's just starting to see the ball get rolling. It's not going to be 5 years for everyone. You can leverage other successful traders' advice, right? But, and this was my issue too. I'm not perfect at all. This was my issue, so I'm sharing. I thought I would be the exception. I think a lot of people do, and that's just the ego getting in the way. You think you're going to be the exception. Oh, it's not going to take me all this time. I don't need a journal. I can take every model. I can do this. I'm walking out of every day profitable. It only takes me 2 days to pass an account. Oh, I'm in drawdown. I'm going to triple my leverage and get out of this now. You think you're the exception, and then you find out real quick that you're not, right? And that's how I was. And once you just let go of your ego and realize, okay, I can use the advice, the good sound advice that people are giving me, and apply it when I'm in trouble, when I'm in drawdown, when I'm feeling tempted to enter position, but there's equal lows below, little things like that. All the things that we can control. That's what makes a successful trader successful. It's not they know Enigma or whatever, right? It's not that I'm here sharing with you macro power 3, all these signatures that we talk about. Because guess what? Sometimes they fail, and I know that. So A, you have a healthy respect to the market so you don't over leverage. Okay, because you know what can go wrong will go wrong. And then your response to a loss is the most important thing. Right? Can your ego sit with that? Can you be uncomfortable for a little bit, or do you have to try and fix it and impose your will in the market right away? Right? The market literally does not care if you just had the best trade of your life or the worst trade of your life. If you just had $1 million trade or you just blew your accounts and lost everything. It literally is just going to do what it's going to do, and we have to control what we can control. Right? And those of you listening right now, if you apply these things, even no matter where you are in your journey, if you've been at this for a while and you know all the concepts, you have all the knowledge, you know what a high probability PD array is, all these things, this is what's holding you back. You need to trade less. It doesn't mean you're always going to only be able to take 1 or 2 trades per day. It doesn't mean that. You can branch out as you gain experience and become a more seasoned trader, right? So, the longer you say, oh, this is boring. I saw this person seems to post winning trades every day, every 20 minutes on Twitter or this or that. Why are they doing so good? It doesn't matter. It doesn't matter what I'm doing. It doesn't matter what Joe Schmo's doing. What is ICT? What Carl's doing? It doesn't matter. Right? You can leverage sound, profitable traders, sound advice to apply to your own trading journey. By extension, if you're focused on doing the right things, you're going to reach profitability quicker than you would if you were just focused on today needs to be green. Today needs to be green. I can't take this loss. I can't even look at the charts. I'm praying to the trading gods. All right. So a big part of it is just acceptance, right? When you have a position on, you're just accepting, right? I can't control what happens, even if it looks like it's A+. Right? Sometimes we see those A+ setups fail. And that's where our healthy respect, healthy fear of the market comes into play. And it protects us, and we can control those things. Right? And you're going to see you can literally fix it right now if you've been struggling with your trading performance and, psychology, trading-wise. You can switch it on. It's harder. It's easy to talk about now. It's harder to actually apply it. And that's when the real growth comes. You need to remember what we're talking about now. You need to write these things down. You need to be freaking talking to yourself. Right? When you're trying to do some dumb thing, chasing price, entering right at 9:30, whatever it is, when you know you shouldn't be in there over leveraged. Or you're breaking your max trade per day rules, things like that. Right? So with my trading now, my job with my reflection is how am I trading relative to my system? Am I following my rules? Did I trail my stop too tight? Like recently, I've been making mistakes trailing my stop too tight. And it's one thing that I'm tweaking. So like think about, this is what Joseph said yesterday in the stream as well, like we're a functioning machine. We just have to keep making those tweaks to kind of give ourselves those updates, right? So, sometimes, and often my stop loss placement will be something I'm satisfied with and that I would do again and again when I move to even when I trail it. But recently I've been just trailing it a little too tight. So it's just something I have to objectively focused on. It's like a priority for me right now. Doesn't mean I'm a bad trader. It doesn't mean I should forget how to use my model or try to switch models or over leverage, right? Or not trail my stop loss. There's levels and ideology and logic behind when I trail my stop to even and trail tighter. But now those performance-based metrics are how I reflect now, right? I know what I'm looking for technically. I'm just asking myself, how am I performing relative to how I want to read and engage with price and manage a position, right? But make your priority this week, every week, but we can't do the whole year right now. We can't say, oh, I'm sure a lot of you guys came into 2025. 2025 is going to be the best trading year of my life. Everything's in motion. Okay, and now you're at a position where you're a little nervous because it's not going as well as you planned, right? You can't go back in time and fix all those days you went on tilt and over leverage. You can't. I can't go back and fix the times I took a trade when I shouldn't have or trail my stop too tight or whatever it is. I can't go back. None of us can. We can accept it now and take it day by day, trade by trade, candle by candle, literally, right? And every time you have that urge when the market's saying, oh, you want to get in, that's your opportunity to make progress and say, no, it's a low probability setup. My model isn't there. I'm not going to chase. It is difficult, but this is how I get better as a trader. And you stack those little real wins of overcoming that temptation, and you're becoming far more of a better trader, far more disciplined, far more patient, where you guys in stream will often probably hear me say, like, I can get a great idea and have a strong inclination on what order flow is probably going to do, but it's not showing. I don't have the confidence in the entry, right? I want to see a better setup, right? So just because I think it's probably going to run the sell side of the range first opposed to the buy side, whatever the scenario is, when just tapering with you guys, doesn't mean I'm just automatically rushing in. Oh, this is the one. This is the one. I'm doing my best to get in sync with order flow until it's so clear to me where I can say, okay, this is my model. I'm going to put on risk. Right? Because then if there's those times where I think it's going to go to sell side first, but there's equal highs above, but it looks like it's going to run the bottom of the range here off this order block, this inversion, whatever. On those times, if I'm taking all of those setups, which again, sometimes they pan out. Oftentimes I'll be correct about that order flow, right? But I just know a lot of those setups and those scenarios are just lower probabilities. And again, we've said it a couple times here and you guys know, trading is a game of probabilities, right? So I don't want to waste my time taking all of these setups that are probably more likely to fail, because once the time comes to execute on a clear, high probability setup, I'm going to be rewarded for it monetarily, because I'm not going to be taking a bunch of little paper cuts from of easily avoidable low probability losses. Okay, but I'm going to be more confident in executing fearlessly, holding trades, confidence in the model, etc. Right? So it's not only good for your account, but it's good mentally, especially if you're struggling. Less is more. Right? More trades, more tilt, more revenge trading, more leverage won't fix your trading. It's the discipline during the in-between. Okay, so prioritize this week, right? I've said this in streams before. I feel like I say it every week when we do like weekly outlook. We want to look back on this week and say, wow, this was a great week. I performed wicked well, right? Hopefully by extension, that leads to a profitable week, right? But your perspective on the market needs to be discipline, needs to be, am I performing well? And you can't do it all. You can't do the whole week in one day. It needs to be Monday. How am I performing? Am I following rules? Am I breaking rules? You know, we want to follow rules Monday, but if we don't, if we make a mistake, we need to make sure Tuesday, that's our pure focus. We don't whatever the mistake was Monday, we don't overtrade. We don't over leverage. We don't take the long with equal lows below, things like that. You're reviewing and asking yourself, how are you performing? And once you start to be process oriented and performance based, you're going to see the rewards that you are looking for. Right? And you're going to see that it was just you versus you all along. Okay, so I'll stop with this little rant here. But you know, in my opinion, again, especially for those who know how I engage with price and who probably were watching some of this price with us this week, or use the signatures macro power 3, this last discussion here was the most important part of today's weekly review, right? On top of the technicals, by no means am I negating technicals and trying to be the psychology guy. You need both, right? But this is the most important part, especially for the majority of traders, right? I've used this analogy before. If I take 7 trades or 10 trades and 7 of them are wins, but on the 3 losses, I can't control myself. And on the first loss, it's just a one little paper cut. It's an inevitable loss. It was a good setup. It just didn't pan out. But on the second and third loss, if I'm revenge trading, chasing, over leveraging, then I'm never going to be profitable, even with that hypothetical 70% win rate, right? So it all comes together. So technicals, yes, are important, but you need to trust the model, trust the work that you've put in, and not freak out after a losing trade. Okay, so again, all this to say, like, still on the weekends, I know us traders, we want to just be on the charts all the time, reviewing it. It's good, but make sure you are giving yourself at least some sort of period over the weekend to kind of take a step away, reset, reflect, recharge for the week, and then come in fresh. Okay, so I'll talk with everybody soon. Tomorrow in Discord, we'll do our weekly outlook. I'll send a new schedule for the upcoming week, probably tomorrow morning, and then we'll get going. The Sunday outlook, it'll probably be like 6 p.m. right after open or something. That's what I'm going to continue to do here. So, yeah, hope you guys enjoyed the stream. If you have any questions, just leave them in the comments, or any takeaways from today, any of your experience. And another thing is, I had that interview. I know I already said it, but please go listen to it. He's a great guy. He shared a lot of gems, a lot of advice, and it's probably very relatable to most people. Another thing is, if you did and have had success with macro power 3, the model, just shoot me a DM in Discord or on Twitter. I'd love to like chat up here, because most traders have similar journeys, but there's slight nuances in some people's perspectives that could help another trader. So let me know. Hope you guys enjoyed this, and I will talk with everybody soon.